Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 15th, and a lot of economic news releases scheduled for today, so let's go ahead and jump right on in. We'll start off with the weekly jobless claims, and we had 417 reported last week, and 418 was estimated, so I figured it would be a slight increase, and actually jumped up to 428. So not so good on the job market. So it looks like more people are applying for unemployment. We got the core CPI. This is without the food and energy. And basically, I'll just go right through this, but basically it came in at expectations and remained tame here. So not too bad, 0.2%. It's showing tame numbers, so we're okay with inflationary numbers. Empire State Index, this is the manufacturing in the New York region, and we had a reporting of negative 7.7 and actually jumped upwards a little bit, negative 8.8. So we got contraction in the New York region. Capacity utilization, we got basically this is the productivity area, and we got 77.3%, and we had basically pretty flat. It came in right in between there, where it was and where it was going. So pretty tame right there. And then we got the Philly Fed. So another manufacturing in the Philadelphia region. We had a negative 30.7. Uh, estimates came down a little bit. It did come down, but not quite to as far as the estimates. So negative 17.5%. So not so manufacturing is really lagging. Jobs are lagging. At least inflation is kind of in check. So not so good economic news releases. So let's go ahead and take a look at the headline news. Stock market's up. So with all that negative news, you got to ask yourself why. Well, because they're paying attention to Europe. They're more concerned with Europe right now. So the news that came in right now is that the major central banks around the whole world are joining forces. They're creating liquidity so that way they can lend to those provide liquidity until end of this year to try help things stabilize in Europe. Of course, I mean it's to everybody's advantage because everybody has each other's currencies in their portfolios, so they don't want to obviously hurt each other's portfolios, and then also global wise. So if one's hiccuping, the rest of it's going to feel it as well. So we need to try to get out of this rut, and that's why we kind of get into helping out Europe versus just helping our own self out because it helps us out as well. So let's take a look at the bond market and see what interest rates are doing. Now, as you can see, we actually went to a 3.5% coupon now. Fannie Mae's 3.5%. We had a little bit of rally. We had a really actually good 30-year auction yesterday, so that kind of raises concern that we should have had a really good rally yesterday, but we still failed to close above where this was, where we started off on Wednesday or on Tuesday rather. So we didn't have the rally that we should have had, and we actually had a huge opening gap here of about 31 basis points. So rates are not as good as they were yesterday. This should be a concern for interest rates as all the economic news should be bond friendly. So interest rates should be better. So this should be concerned. I would be very cautious here. I would look to maybe, I don't know if we really hit our height yet, but definitely I would definitely keep an eye on where interest rates are at. So interest rates are a little bit worse today. I do think this was close as we typically see a opening gap either to the worse or for the better. A lot of times they do get closed up, create that solid foundation. But we do need to be cautious that we could easily have a drop here on this. So we could easily end up down, par 50 range very quickly if we don't start getting some momentum upwards a little bit. So keep an eye on it. And, again, these were some important economic news scheduled today. They weren't so equity friendly, but, the traders are shrugging off and actually looking at the European news. So you guys have a wonderful day, and we will catch you tomorrow. Again, stop by my website, CaliforniaMortgageTips.com, for your free reports, for your education on real estate, for all you home buyers, and for all you people looking to refinance. We also have a great mortgage calculator for your use. You guys have a wonderful day. Catch you tomorrow.